Hey everyone, and welcome. Today we're going to cut right through all the noise you're hearing about the market and help you build a clear plan. We're talking tariffs, we're talking interest rates, and most importantly, how you can put together a smart investment strategy to handle all of it. All right, let's get right into it.
So, does this feel familiar? One day the market is soaring because of some good news, and then bam, the very next day it's diving because of a single headline. If that sounds like your life, you are definitely not alone. I mean, the constant stream of news that seems to contradict itself, it's enough to give anyone whiplash, and it makes it feel pretty much impossible to know which way is up.
So to really get a handle on what's going on, we first have to look at these big, conflicting forces that are battling it out. It really can feel like we're all on this massive financial roller coaster, right? But the key is to understand the mechanics behind the ride, what's actually driving the ups and downs. Let's start by looking at the two biggest forces that are pulling the market in totally opposite directions right now.
What we're seeing today is this powerful tug of war. On one side of the rope, you've got all this hope about the Federal Reserve cutting interest rates, and that's pushing stocks up. Why? Well, lower rates make it cheaper for companies to borrow money and grow, and that gets investors really optimistic. But pulling in the complete opposite direction are the threats of new tariffs. And these can jack up costs, mess with supply chains, and basically create this huge cloud of uncertainty that just spooks everyone.
You know, it's so easy to feel anxious and just react to every little headline in a market like this. But what if you could trade that anxiety for some actual confidence? The whole goal here is to shift from being a passenger just holding on for dear life on that roller coaster to being the navigator with a map. This is all about building a proactive game plan you can count on, no matter which way the market decides to swing.
And this right here is maybe the single most important mindset shift you can make. We are not trying to be fortune tellers. Let's be real, nobody has a crystal ball. The real power isn't in trying to predict the future, it's in having a solid, robust plan to navigate whatever the future throws at us.
So, how do we actually build that plan? Well, we've broken it down into a simple, memorable 4-point playbook. Just think of these as the 4 pillars of a strategy that can help you approach this crazy market with a bit more clarity and hopefully a lot more confidence.
Okay, here's our roadmap. First, we're going to start with the foundation, staying informed about the right things. Then, we'll build up our defense with diversification. After that, we'll zoom in a little bit by monitoring the key sectors that are most affected. And finally, we'll talk about when it makes sense to bring in an expert, consulting the pros. So, let's get started.
Our first strategy is all about awareness. Since we know trade policies and Fed actions are the main things driving the chaos, that's exactly where we need to focus our attention. The key here, and this is crucial, is to tune out the noise. That means avoiding all those speculative headlines and that crazy social media chatter. Instead, you want to focus on official announcements and hard data from financial sources you can actually trust.
Okay, with that foundation of awareness set, our second strategy is diversification. You've definitely heard the saying, don't put all your eggs in one basket. Well, this is the investment version of that timeless wisdom. By spreading your money across different kinds of assets, you limit the damage if any single one of them takes a big hit. You can think of it as your portfolio's own built-in shock absorber.
And here's what that might look like in the real world. Just take a look at this mix. See how the US stocks are balanced out by international ones? And the more growth-focused stocks are balanced by more stable bonds. The idea is that when one part of the world or one type of asset is struggling, another part might actually be doing pretty well. This is exactly the kind of balance that can help smooth out the ride during these volatile times.
Strategy number 3 is where we get a little more specific. Because you see, not all parts of the market react in the same way to the same news. For example, if you're hearing a lot of talk of a potential rate cuts, sectors like technology and real estate could really benefit, since lower borrowing costs can fuel their growth. But on the flip side, if tariffs are the main story of the week, you'd want to keep a close eye on industrials, since they're often right on the front lines of any trade dispute.
And that brings us to our final strategy. Don't try to go it alone. A good financial advisor can help you apply all of these ideas directly to your personal situation. They're there to help you build a plan that's not just based on today's headlines, but one that is truly aligned with your long-term goals and, just as importantly, how much risk you're actually comfortable with.
Okay, we've covered the problem, and we've laid out the 4-point playbook. And, knowledge is power, but only if you actually use it. So, what's your next move? Let's talk about how to turn these ideas into action. Here are 3 simple things you can do, like right now. First, go ahead and download the free checklist we've put together. It'll help you keep these strategies handy when you need them most. Second, why not join the conversation? We'd love to hear how you think tariffs might be impacting your investments. And finally, To make sure you're staying ahead of the curve, subscribe for our weekly market updates.
So I'll just leave you with this one question to really think about. Take a good, hard look at your own strategy and ask yourself, is my portfolio built for the realities of tomorrow's market, or is it kind of stuck in the past? The answer to that question could really make all the difference. Thanks so much for tuning in.